Hello and welcome to 3.0 TV. I am Vishakha Thakur and you are watching the Coin Monitor. Virtual digital assets were on the up move once again after the Federal Reserve Chairman Jerome Powell reassured of interest rate cut later this year. The remarks issued ahead of his congressional testimony helped boost prospects of risky assets. Bitcoin, the largest crypto by market cap, hovered near the $67,000 crucial mark. IC15 index of cryptocurrencies was trading down by 0.8% at 85,500 points. Several factors influenced Bitcoin's price movements, including institutional adoption, macroeconomic trends, regulatory developments, and investor sentiment. The Fed chief reaffirming the rate cut later this year through a careful approach is certainly helping to lift investor sentiment. Bitcoin has jumped almost 50% this year thanks to inflows into US exchange-traded funds holding the digital currency. However, gold's rise could be seen as defensive positioning due to geopolitical tension or a possible pullback in global stocks. While Bitcoin will have to contend with intermittent selling bouts, but the gravity of institutional buying activity should help the grand old cryptocurrency to aim for higher moves. Bitcoin prices have risen due to buying demand for spot Bitcoin ETFs and expectation of a rally in prices post-halving. However, a reset in funding rates for perpetuals is seen causing a market-wide sell-off and over $1 billion in liquidations. While the selling pressure is also caused by profit-taking at historical highs and miners offloading some of their holdings. Analysts said that Bitcoin successfully retested the support area and the ongoing consolidation phase would set it marching towards new highs. Meanwhile, Barry Silbert's digital currency group, the owner of bankrupt cryptocurrency lending operation Genesis Global Capital, has filed a motion to dismiss New York Attorney General Letitia James' lawsuit against the firms. The global cryptocurrency market cap was at $2.52 trillion mark, decreasing 0.7% in the last 24 hours. However, the total trading volume decreased by 40% to $153 billion. Interestingly, Ethereum has seen a significant increase in value with the recent transaction from Vitalik Butrin's wallet transferring 30 ETH to Railgun and swapping around 27.63 ETH for 100,000 USDC. Ethereum's position as a top beneficiary of crypto markets bull run has been solidified by a 154% increase in trading volume on Solana-based decentralized exchanges from February 24 to March 2, surpassing the previous record of $9.88 billion traded in 1 week. In other news, DogeCoin, a Solana meme coin, has maintained its high price since its debut on Binance, despite broader crypto market volatility. DogeCoin is now trading for $2.10, up by 38% in the last 24 hours. US stock futures traded lower after the major averages posted their first winning session in 3 days. Futures tied to the Dow Jones Industrial Average dropped 0.1%, S&P 500 futures fell by 0.2%, and Nasdaq 100 futures dropped 0.4%, while Bitcoin was trading at $66,675, down by 0.7%. Ethereum, the second largest crypto, was down by 2.5%, trading at $3,780. If we talk about Binance's BNB token, it was up by 1.3% to trade at $435. Solana Sol was up by 7% and was trading at $142. Cardano's ADA token was up by 0.2% to trade at $0.73. Avalanche's AVAX was trading at $43.2, higher by 5.2%. Polygon Matic was trading up by 6.4% to trade at $1.2. Ripple's XRP token traded at $0.62, up by 0.5%. Polkadot was up by 3.3% to trade at $10.4. Meanwhile, Doge, the popular meme coin, was trading down by 9.6% at $0.15, and Shiba Inu was trading down by 15%. So that's all in the Coin Monitor. This is me, Vishakha Thakur, signing off. For more on such updates and market news, please log on to our website www.3versetv.io or scan the QR code. With 3.0 TV, stay connected with the world of blockchain. Stay up to date with infinite world of NFTs. Come explore and evolve with 3.0 TV in the Metaverse.
So many coins, so much volatility. 3.0 TV delivers the news that matters.
Bitcoin's overnight pullback from record highs has normalized funding rates in the crypto perpetual futures market. The leading cryptocurrency fell 10% to $59,700 after reaching a new lifetime high above $69,000. Well, this correction led to the closure of $1 billion worth of leveraged perpetual futures bets across digital asset markets. The CoinDesk 20 index rose to a high of $2,627 but has since pulled back to $2,496. Since then, annualized funding rates or the cost of holding leveraged bets in perpetual futures tied to the top 25 cryptocurrencies have reset to less than 20%, down significantly from triple-digit figures observed a few days ago. This cooling of the overheated perpetual futures market opens doors for a more long-lasting move to record highs. A positive funding rate indicates that perpetuals are trading at a premium to the spot price, indicating increased demand for bullish bets. Bitcoin and gold have reached record highs, marking the first simultaneous records for the two assets since Bitcoin emerged over a decade ago. However, the drivers of each asset are different, with gold acting as a haven store of value for millennia and Bitcoin playing a role beyond pure speculation. Bitcoin has jumped almost 50% this year thanks to inflows into US exchange-traded funds holding the digital currency. Gold's rise could be seen as defensive positioning due to geopolitical tension or a possible pullback in global stocks. Chris Weston, head of research for Pepperstone Group Limited, suggests that traders chase short-term momentum across asset classes. Both Bitcoin and gold are viewed as beneficiaries of expectations of looser monetary policy, with swaps market showing a 62% chance of a Federal Reserve interest rate cut in June compared to 58% at the end of February. Bitcoin prices have risen due to buying demand and a reset in funding rates for perpetuals, causing a market-wide sell-off and over $1 billion in liquidations. The cryptocurrency dropped to as low as $60,800 but neared $67,000 in Asian morning hours, indicating resilience. The selling pressure is likely driven by profit-taking at historical highs and miners offloading some of their holdings. Inflows in spot Bitcoin ETFs remain strong, with BlackRock amassing over $760 million on Tuesday. Market analysts remain optimistic about lofty price targets for Bitcoin as April's anticipated halving event approaches.